One question I had just on the lending space is just the origination function of, like Athena originating the basis trade, you guys doing a lot of Bitcoin back lending, people like Neutral, which are kind of trying to expand the Athena style basis trade to just like the middle tail of alts. But maybe if you could speak about how origination has changed over the years and where just a lot of the meat on the bone for origination is today. And I just to tee it up, I know you talked about Bitcoin as being kind of the mortgage-backed securities of crypto. It has the most scale. It has the most reasonable APY. You can be doing it the safest. But maybe if you could just kind of start with that and then talk about the origination landscape across crypto today.
Yeah, for sure. I think in terms like we talked before about how the market size today is about 20 bill in terms of Bitcoin back to lending, and on a Bitcoin market cap of a little over 2 trillion, you're talking about a 1% penetration. So it's still relatively small. Like this is quite a tiny market, but if we think the reason I think Bitcoin is kind of like the mortgage backed securities of the millennials and the Zoomers is uh, you know I continue to think it's going to increase and appreciate in price. And so let's say Bitcoin doubles over the next 24 months and you're looking at 4 trillion. I think it's not a stretch to see that the lending or the loan origination market could expand from 1% today to maybe 5%. In equities, it's kind of in that mid single digit level. And then 5% on 4 trillion, you're talking about suddenly a $200 billion Bitcoin back to loan market. And I think the reason for this is that Bitcoin's going to make its way into everyone's portfolio over time. Because in the same way that real estate was really the wealth accumulation vehicle of boomers, you had this secular trend of declining interest rates and easier access to mortgage finance through things like securitization, and so most boomers had a lot of their wealth in their house. And I think the millennials and the Zoomer generation is kind of in a lot of ways priced out of real estate, but they can buy and start buying into Bitcoin. And so I think over time, the game for them is going to be accumulating more Bitcoin, and they'll be able to borrow against it in the same way that boomers borrow, home equity lines of credit against it. And so that's why I think it's going to over time be an extremely big institutional market. And the way that that will occur is that institutions will start investing in, portfolios of Bitcoin backed loans. Pays a good yield. It's well secured. It's pretty short duration. And so that's where we see that industry kind of trending over time.
And the syndication side doesn't really happen today, right? Like it
No,
feels
not
like
at all.
that has not been recognized yet.
If you look today at the largest lender in the space is Tether. Tether provides loans collateralized by Bitcoin, but you got to post the Bitcoin to them in order to do that. And whereas in mortgage-backed securities markets, you have a basket of 10,000 mortgages, but the houses, the deeds to the houses are not all held by the investors. They're held in a vehicle, and the investors get secured bonds of various levels of protection against them. But that's what all of your pension funds, your insurance companies, and your major your major institutional investors put money into. And that's what the maturity of this market will look like in the end state. You'll have an insurance company who's got bonds which are backed by or which are backed by Bitcoin backed loans under the hood.